Hi guys, Dr. Marvin here, and welcome to week 6 of financial accounting. Here in week 6, we're tackling our last real chapter content, the statement of cash flows. So we've taken a close look as we've gone through this course, kind of building blocks of recording transactions, creating adjustments, working with the worksheet, preparing a balance sheet, preparing an income statement. And also we've looked at retail companies, merchandising companies. We've looked at service companies primarily. So the one kind of missing piece that we haven't really tackled is this additional financial statement called the statement of cash flows. In previous chapters, we looked at and worked on preparing balance sheets and income statements, but we haven't up until this week really address this additional financial statement, the statement of cash flows. So why is there this additional financial statement? Well, cash is the lifeblood of any organization. I don't care if you're talking about a church, Tiffin University, Apple, IBM, that little diner down the street from your house that looks a lot like the little diner down the street from my house. Okay, what do all these companies, from the little diner down the street to the mega church out on the freeway to Apple and IBM, what do they all have in common? They all have to have cash to be able to pay their employees, to pay their utilities, to put on a new roof, to buy the inventory, the food, whatever it is, right? They have to analyze and understand those cash flows that are happening inside their company, because when cash goes dry, right, we're done. We're toast. I don't care if you're talking about the church down the street, the diner down the street, or Apple, okay? We have to have cash. It's our lifeblood. It's our sustenance. It's what keeps us moving, keeps us growing as we move forward. So we really need to understand what's happening in that cash flow, so that we, and not only as managers, but also as investors or other interested stakeholders, can understand what's happening inside that company. And so that's why the statement of cash flow is so important. So as you get into chapter 16, what you're going to learn more about is really the 3 key areas of the statement of cash flows: operating activities, investing activities, and financing activities. Okay, so I kind of view you're going to get different descriptions as you go through the chapter content and the videos and everything for this week. Operating activities, keep it simple. Operating activities is what we do every day. So Tiffin University, we hold classes, we pay employees, we serve lunches, dinners, we run the cafeteria, we run the library, we have our administration, and those sorts of things, okay? That's what we do every day. So anything we do every day falls under operating activities. So when you pay your tuition bill as a student, that's operating activities for Tiffin University, because we're collecting tuition from our customer. When they pay me as a faculty member, that's something they do every day. That's an operating activity for Tiffin University. Okay, every day, operating activity. Okay. Number 2, investing activities. Investing activities, remember, we're looking at this from the company's perspective, not as a consumer, okay? So from the Tiffin University company perspective, what do we invest in? Well, we're talking about making long-term capital investments. So from Tiffin University's perspective, we're talking about building a new building. We're talking about buying vehicles or technology for classrooms, or servers or other technology to host online classes. Those types of things that are investments in our future as a company. Okay? So not everyday stuff, that's operating activities. Investing is the long-term fixed asset types of transactions. Okay? Financing activities is the third section, and that's how do we create financing available to make either our operations happen or our long-term investing, our capital assets, okay? So usually borrowing money from a bank for building a new building, let's just say, or selling additional shares of stock. So then we now have more equity financing within the company. Remember, we're looking at this from the company's perspective. So financing is generally going to be issuing shares of stock, generating equity financing, as well as borrowing money from a bank or selling bonds, going into debt, you could say, okay? So in the discussion post, we have a statement of cash flows for a particular company. Looks like we're talking mostly Walmart and Costco in there. And you're going to do some analysis of that. What can you see? What can you learn by working through that statement of cash flows? What information can you glean about your particular company? How they're operating, what they're doing well, maybe what they're not doing well. So hopefully that'll give you some good insight. Again, some practical application of the things that you're working on and learning about here in week 6. So one last big push here, guys. So last chapter of the course. So this week we still do have the discussion post. We still do have the Learn Smart Book activity, the quiz and the homework. Kind of the routine things all related to the statement of cash flows. Looking ahead to next week, we have our final exam. So next week, welcome video will kind of hit on a few things that are unique and special about next week. But keep up the great work. As always, let me know if you have any questions or concerns. And look forward to talking to you guys soon. Take care. Be well.